Kelly, you are back, sir. How are you?
Good to see you, Matt. I'm great.
Good to see you too. When we met a few months back, you came in. You're the head of Your Health Idaho, which is, again, to be clear, Your Health Idaho sits in between insurance companies, the federal government, and the consumer. Correct?
Yeah, we're like Amazon for health insurance.
God bless it.
Yeah.
So I can go, which I haven't done, but I'm going to. I can go to Your Health Idaho. I can put in my income, a couple different pieces of information, and I will find out what kind of plan or subsidy I could get from the federal government for a private insurance plan. And that's your role, which is essentially connecting individuals in Idaho to private insurance systems with federal government support. And you're the connecting web that helps all of these people work together instead of me as an average consumer just going out like, well, let's see how this works, which I guarantee you would never work because I'm just not that bright. So God bless you for being here. But that's Your Health Idaho, and that's what you spearhead.
That's right. So Your Health Idaho, really the only place in Idaho you can get a tax credit. That's income based. So the more money you make, the less tax credit you receive, and vice versa. So everyone that's on Your Health Idaho earns money, files taxes, and that tax credit is based on that income. So really helps connect them through that tax credit. And then also we have 8 medical plans, 5 dental plans. We have thousands of agents across the state that can help you find that plan that fits you, your budget, and whatever your health needs in your family.
And to be clear, this is not a public health plan service, right? So when you say we have this, you're saying we work with private insurers to provide this service to private citizens with a tax credit, essentially funding from the federal government. You are not a public insurance company, like public health insurance company.
We are not. Actually, we were created by the legislature. I am not a state employee. We're not a state agency, but we are a government entity. And if that sounds really confusing to you, it probably is. But I mean, when it comes right down to it, we act like a business. We have to make enough money, pay our own bills. We have to save for a rainy day. And really, that's it. The legislature created us simply because that's the way marketplaces work.
And you make money when you help connect people to insurances.
Yes. So we are paid by the insurance companies based on how many enrollments they have.
Right.
We don't receive any money directly from consumers. We do not pay agents and brokers. But if someone enrolls and pays their premium to the carrier, we do receive a little bit of money that pays for our operations.
So it's effectively like the insurance companies have like good restaurants or just restaurants, and you're an Uber driver that just drives people directly to the restaurant. And every time you show up, the valet's like, here's a 5-spot, Pat. That's just for you. That's just for you.
Well, I don't think anybody's going to slide me a 5-spot, but I get the analogy.
God bless it. Listen, when you came on originally, we were talking about some of the ramifications of proposed legislation, to number of people insured, to the rate plans, right? Silver, bronze, platinum, or is silver, bronze, gold?
Bronze, silver, gold, platinum.
Okay, the 4. Different bases of pay, a bunch of different things. And that was a fantastic episode. It was like one of the most information-packed 25 minutes that I've done in a long time. Legislation has passed now. And so I asked you to come in to actually explain, okay, what is happening now? This not hypothetical, what did take place, what is in effect. How has Your Health Idaho and access to insurance in the state of Idaho been affected by the policies that were just passed?
Well, it's a great question, Matt. And there's really 2 things that worked together this summer. So the reconciliation bill had some healthcare elements to it. And then also CMS, or the Centers for Medicaid Medicare Services, issued a rule. Now, it's not unusual when a new administration comes in that they issue a rule. That is, rules typically tell us how to operationalize a law. It's a little bit different than something that goes through Congress. Today, I think it's important to not differentiate between the two because consumers don't really care where the impact came from. They just want to understand how to work within that, right? How to make sure that they stay eligible for coverage. So we have some changes actually going into effect on August 25th. So happens to be Monday. And the primary things that are changing, we have what we're calling a lower income special enrollment period. So folks who are at roughly 150% of the federal poverty level, and you're like, well, what does that mean for a single person? Think about maybe someone making $18,000, $20,000 a year. That's a single person.
Okay. And so then 150% of that would be roughly around $30,000.
So that a 20,000 for a single person is 100 for 50%.
Oh, gotcha. Okay.
So
got
they
it.
no longer have a special enrollment period. That's been eliminated.
What was it previously?
Well, anyone in that income range could enroll whenever they wanted
At any time.
at any time.
And now the enrollment window has been shrunken to what portion of time?
Well, we still allow people to enroll outside of open enrollment, but they have to have a qualifying life event. And a qualifying life event is no longer having income of that lower portion, so 150% and below. So that's just gone. If you have a baby, you get married, get divorced, you have a move into the state, those are all still qualifying life events and you can enroll with those.
But if you're just an average person, no baby, not recently moved, and say I make $15,000 and I'm a single person, I have to wait for the enrollment window.
Exactly.
And you're going to stab me in the eye. When is the enrollment window?
I won't stab you.
That's why I have the pen, not you.
It's a really good segue because one of the great things in Idaho is our enrollment dates were not changed by any of the rules that were passed by CMS. So we start on October 15th and we end on December 15th.
Great. So you have 2 months out of 12, obviously, in 2 months every single year that you can open enroll.
That's right.
And outside of that, if you have a life event or something significant and you weren't part of it, you can enroll then, fine. But just being somebody with low income is not qualifying.
They've taken that away. So
what do you do if what if I'm like 18 and I'm just moving out of the house and my parents, like kick me off their health insurance because they don't want to pay for Matt anymore? Fair, whatever.
Yeah.
And it's like March and I'm working at some place making $15,000 a year. What do I have to wait without insurance from, let's say, March when I get booted off my parents until October 15th?
So it depends.
Okay.
I hate to give you that answer, but if you're 18, we're on your parents' plan and they kick you off, that would be involuntary loss of coverage. Like you didn't make the decision, your parents did.
They booted me out, man.
Yeah.
So wasn't doing the dishes.
Yeah.
Like,
mowing the lawn, right?
Yeah, right.
That would be involuntary loss of coverage. That's a qualifying life event.
Ah, gotcha. Okay. So there's okay. So it depends.
It depends.
Totally get it. Okay.
But the good news is it depends. That's why we work with agents. They can help you find that event that may work for you outside of open enrollment. We have lots of information on our website.
Gotcha. Okay. So coming back to it. So we have no longer out of the poverty level, 150% of the federal poverty level is no longer a reason that you get to enroll outside of the standard enrollment window. So that's one.
Yes.
Great.
2 other changes on Monday, August 25th. It's around income attestations. And again, these are really kind of inside baseball type things, but important for consumers to understand. So when you apply at Your Health Idaho, you fill out an application and you list your income. We then take that application data and we call it ping or check federal sources. So we say, is Matt Todd really Matt Todd? Does he really live here? Does he really make the money that he said he did on his application?
Right. Like an AGI, right?
Right. It's like filling out a mortgage application
I was gonna say,
or credit card,
yeah,
right?
they verify when you say, hey, I made, $25,000. They're like, did he really? They're like, yeah, he did. And you're like, okay, great.
And the 2 things that have changed effective Monday are Matt doesn't have any information at the IRS. Maybe you're a first-time job earner. Right, you haven't filed taxes before, or you didn't earn enough to file taxes last year. So you can no longer say, yes, I make this money if the IRS says, no, you don't. So you would say, well, I do. So here's a pay stub. So you will submit to us a little bit more documentation to verify that income. So just a couple of extra steps in that. So that's one.
Well, okay. And when you're saying that, so before August, as of today, if I go on and I just got a job and the IRS doesn't have any information, what happens today?
You could say, I make $25,000 a year. We would say the IRS says you don't. Matt would then say, I attest under penalty of perjury that I really make this amount of money.
Right.
And you're on your honor for that.
Okay. And then on Monday, how is that different?
You have to submit documentation to prove that you actually make that money.
It's not a signed affidavit or something. It's like, no, let me see the W-2.
That's right. Or a pay stub or, whatever.
Yeah. Okay.
So that's different.
Okay.
And the reason, again, is that there's nothing at IRS that we can verify against.
And they're not going to take my word. It's like, show me the documentation.
Got it. Yep.
Got it. And that theoretically is designed to reduce the number of people that are taking advantage of the insurance exchange that don't really qualify.
Correct.
Okay.
Yep.
Okay. So this is part of the articulation of people were concerned, or maybe it's verified, I have no idea, but people were concerned, okay, this is part of the fraud, waste, and abuse, because all they have to do, if the IRS has no information about them, and all they have to do is sign a document saying, I only make $10,000, and then they go on to get free insurance or something like that. It's like, okay, no, how about you show us the pay stub for the $10,000 instead of just signing a form?
Yep.
Got it. Okay.
So the second one's very similar. It is that the income you have on your application is higher than the eligibility threshold, which is, just think about a lower number.
Sure.
Right. So you're saying you make 25, IRS says make 10, you can no longer attest to making that $25,000. So a good way to think
when you say I can no longer attest to
meaning sign, I'm Matt Todd, under penalty of perjury, agree that I make this amount of money and I'm responsible for it.
Is there any benefit that I would get by saying I make more money than the IRS says?
Only if you're not eligible, right? So if the information that the IRS has would make you ineligible for a tax credit, then the benefit is you attest to income that does make you eligible. And therefore, you get a tax credit, you can get health insurance.
Gotcha. So if there's a difference in eligibility, previously I could attest to the accuracy of it, and now I can't do that.
Correct.
Gotcha.
So a good way to think about these changes, at least the last two that we've talked about, is today or prior to today, we could determine your tax credit and then you could verify later on. Today, we have to verify and then we can give you a tax credit. So that's kind of the difference if you just think about it from like a 10,000 foot level.
Yeah, right.
So that's what changes on Monday.
Okay.
And those changes will carry forward.
Okay. Are any of those changes very concerning to you?
Always concerning when there are extra steps in the process.
Sure, that's fair.
We talked about that, I think, around some other policies that were being considered. When you really need something, you're more willing to take more steps to get that. And if you are, it'd be nice to have, but I'm okay if I don't have it, you might stop the process or not complete it. So what happens in insurance when people that really need it, they usually have a health condition or they intrinsically believe that this is important to have. Right. Healthy young people that may think it's a nice to have. If you put more steps in, they may just say, yeah, I'm good.
Yeah, and you pretty much just summed up Matt at 22. I was like,
whatever. Yeah, And what happens when Matt at 20? Yeah, right. And that's exactly right. Matt at 22 is invincible. So that risk pool that you base the cost of health insurance on gets worse, right? Because all the healthy people are like, I'm good.
I'm good. Just because you added those extra steps.
Yeah, I mean, that's the risk. Now, of course, how that actually happens over time, is yet to be seen. But that's essentially the concern, is that by adding extra steps, you have healthy people leave the market, and that'll deteriorate the risk pool. And then, of course, premiums go up.
I got a new furnace when I was like in my 20s, and I got a high efficiency furnace because the guy was like, listen, you could get like the 80% efficiency, but you really should get the 95. And I'm like, I'm not paying extra for the 95. And he's like, no, but you don't understand, because there's a credit that comes along with this. There's a rebate. So like it all comes out in the wash, because not only is your bill lower, you're going to be more comfortable, and you get this rebate from your utility company. I was like, all right, cool. Put it in the 95. So I put it in the 95. This company, Harry Clark, they filled out the entire rebate form. Yeah. All I had to do was fill in an address and sign it and send it in. I did not get that $600. I did not. I couldn't even I'm not proud of this, but as a younger man, it's like, you added a step. It's like, I didn't have enough coffee. I wasn't, it's like, I just never sent it in. And it was like, I would have got $600. No questions asked. Yeah, I mean, and I wasn't cheating anybody. Like, I literally did get the 95% furnace. So it was like, oh my God, man, this is ridiculous. So yeah, I 100% understand what you're saying. Yeah. It's painfully clear in my life.
Yeah. So, I mean, those are some of the near-term changes. And, we're going to do everything we can to educate Idahoans so they know what those steps are. Most people are going to be able to say, well, of course, that's the income that I make. Here's my pay stub. Right. And we will work with them and we'll get that information in the system and they'll be good to go.
Wild times.
Yeah.
Okay. So those are a few, and that's kind of what you were describing as the inside baseball, like kind of technical, but it still does have a result for extra steps or extra consideration for the consumer. So it doesn't really, like, ultimately people should understand.
Yep.
Great.
And then, so we advance now to January. We've got some new rules that come in 2026. So the definition of eligible immigrants. So before, if you were lawfully present, you were eligible for a tax credit. Of course, if you haven't earned income, because tax credits are for tax people, meaning you got to file taxes and earn income. So if you are a green card holder, Cuban immigrant, and some Pacific Islanders, you're still eligible. But if you're lawfully present, so think student visa or things like that, you're no longer eligible for a tax credit. We can still enroll you, but you will pay the full premium.
Gotcha. So if I'm like an Italian dude came over on an exchange program for, a couple years in college, they're like, nah, man, you're not getting any tax credit. And I'm like working on the side or something.
Yep.
Okay, great.
Yep. That's another change.
Gotcha. And why the Cuban immigrant? I've never heard of that.
I have no idea that this is just the way the law was written. I don't know how they defined who went where, but that's what the rules are. We simply know what the rules are and we try and follow them. So,
I don't know if you can tell me, are there many people that file under a Cuban immigrant in the state of Idaho?
I don't know. We know how many are in each of these categories in total, right? So we have about 3,000 folks with a immigration status that they would no longer be eligible. So about 2.5 or 3% of our enrollment. So they may still enroll and pay full premium, but they wouldn't be eligible for a tax credit.
Okay, so within Idaho, it's only, again, 2,000 to 3,000.
Yeah.
Oh, so it's not that many. But we're not that huge of a state. Do you have any idea about overall, like with nationally, how many people would get dropped because of this?
I do not.
Okay, but that's clear. It's like, look, unequivocally, 2,000 to 3,000 people that were getting health insurance now come January 26 will not be eligible for a tax credit for that insurance. They can still enroll in the insurance, and these would be, again, somebody on exchange. They can still enroll and get insurance. They're just not getting a tax credit.
Correct.
Got it. Okay.
Yep.
So they're not getting dropped from insurance. They're just getting dropped from the supplemental tax credit.
Yep.
Great. Okay,
Yep.
Good.
So this one's a little bit we'll go back and talk about what happens if you say your income is higher than what it really is. Well, there's this thing called advanced premium tax credit recapture. It's a lot of words, right? Essentially, it means that if you get something you're not supposed to have, you're going to have to pay it back.
Yes.
Advanced premium tax credits are the technical term for tax credits that we use.
And the advance is when they give it to you before you qualify?
Give it to you before you file taxes.
And then if you didn't actually qualify once you filed taxes, I'm gonna have to see that hat. You're gonna have to give me that money back.
Exactly. So what usually happens is it's not people that really don't have any income. They simply underestimate or misestimate what their income is. So think about somebody that might be working in any sales, any self-employed person, any of that stuff. Yeah. And they may say, well, I think I'm going to make $30,000 a year. And so that's what they put in their application. And then at the end of the year, they work some weekends, they got some bonuses.
Right.
Now they made $33,000. Well, that means that making more money means you should have had a smaller tax credit.
So whatever that portion of the tax credit, you're going to have to owe that back.
Yes.
Gotcha.
In the past, there was a limit. So that single person making $20,000 a year only had to pay up to $375 back. So there was a cap on that.
Gotcha.
That
and
cap
now
is
it's like,
gone.
if you go from 30,000 to 60,000, you had a banger year. 30,000 to 60,000, you're going to have a significantly different tax credit recapture.
Right. Yep.
Presumably thousands of dollars.
Presumably.
Could be.
So no longer a cap on that. You pay back whatever you weren't eligible to receive.
Gotcha.
Pretty straightforward.
Man, it's one of those things because I've always been self-employed. And so I've always, obviously paid both sides of Social Security, like the whole bit, right? And it was always that thing where it's like, do you want to make more money because you're just going to owe more taxes? But then you're like, yeah, but you made more money.
Right.
Like,
yeah.
Come on, man. You want to go for the money part. You don't want to go for the reduce your income so you don't have to pay taxes part.
Paying taxes, no one wants to do it, but it's a privilege, right?
Yeah, it's great. It's like I mean, good Lord, man, how beneficial are, anyway, we don't have to get
That's another topic for
like, I hate paying
another
it, but
time.
like, come on, man. Like, it's good that when I have it, because I've had period of times when I didn't really have a tax bill and I was not happy during those times.
Right.
That's not great.
That's a good watermark, right?
Yeah, right. It's rough.
No tax bill, not happy.
Yeah, right, for sure. Okay, let's keep going here.
So that is,
Unlimited recapture.
yeah.
Okay, great.
I mean, makes sense. Let's just keep our income up to date. So we'll work with consumers and make sure they understand, hey, keep your income updated. If you get a raise, if you get a bonus, let's keep that income on your application updated. And so if Todd, you're on the exchange and you get a bonus at the end of March, just come on to your account, update your income, and we'll recalculate the tax credit for you.
Got it. Okay.
And then we've said a couple of times, tax credits for tax people. If you don't reconcile your taxes, then you become ineligible after a year. So get your tax credit, reconcile it, file your taxes, all the things that we want people to do.
In general.
Yeah. And please do that so you can remain eligible for the tax credit. So it's called failure to reconcile. Really, in English, just file your taxes and reconcile what you got versus what you earned in income.
And that doesn't happen automatically. Like when I file, it doesn't automatically reconcile with your office.
It does not. So when you if you have a mortgage, right, you get a 1099 INT and it says Matt Todd paid this much in principal and this much in interest. We send a 1095A. All that means is here are the months that you paid premium. Here's the tax credit you received. Here's the total. And then you take form 8962. Yes, I know.
I got to write this.
Yeah, this is a lot, right? So 8962, and that is your reconciliation form for your income. It says take the income from your whatever tax
line
form it is.
35C and then subtract it from your head. And
right. And if line 12 is higher than line 13,
right.
then stand on your head and subtract it backwards. Right.
That's so brutal. There was one point in time, probably around the time when I thought health insurance was not a necessity, when I was like, I could file these taxes. And it takes 2 seconds. You're like, oh, forget it. This is over.
Yeah. TurboTax. Here I come.
Right.
Yeah.
God, it's such a racket. Like they got you you know what it's like? It's like title insurance every time you buy a house. It's such a racket. But the one time, like I actually have a friend who purchased a home. This was like back in my former life. Purchased a home down the street, and here comes the $1,500 title insurance when he's closing. He's like, oh, should we really though? Like, oh, and he does, but he's like mad about it. 3 months later, it was the FBI. They rolled up. The person who had sold him the house was getting like incarcerated. And they hadn't, there was some problem with the title transfer. And if he hadn't had the title insurance, they would have gone after him. But he was like, wait, I have title insurance. And they're like, let me see that. And then they went to the title company and it was like out of his hands. So he could have lost his house.
Oh my gosh.
Yeah. So it's like insurance, like title insurance, right?
Yeah. It's like the one thing when you do all the mortgage signing, you're like, I'll never need this.
I'll never need this. And you're like, come on, man. Like somebody would have caught this previously. Like, or like, this is a single owner house, right? It's like, he built the house. Why am I going to get title? And he hasn't even transferred it. Right. Yeah. Anyway, it's a wreck. Anyway. Yeah. All right.
So again, tax credits are for tax people. Let's keep your income up to date. Let's make sure you get the right tax credit and reconcile.
Sure.
Pretty straightforward stuff. The one good thing is that for catastrophic plans and bronze plans, they're now eligible for what's called a health savings account. So health savings accounts are tax beneficial, right? You can put pre-tax earnings into health savings accounts. They grow tax-free, and you can withdraw them without paying for that growth for use for medical expenses. That's always been there. Health savings accounts have. With the reconciliation bill, they are now bronze and catastrophic are eligible for a health savings account. So you can not only put some money in there, lower your taxable income, but you can also pay for primary care visits with that HSA fund.
Okay.
So it's like a 401k, but for health insurance.
Could I ask you a couple questions about the HSA? And I know you're not like an insurance person.
I can try it. Yeah, I mean, you can ask.
I'm taking this to the bank.
Okay.
Okay, so I'm a real idiot, and this is going to expose it. So like the HSA, essentially, if I make $100, I'm going to have to pay, let's say I'm in the 30% tax bracket. I'll have $70 at the end of the day, and I don't have an HSA. So I pay the $30. I go home with 70, and then I get, I got to go to a doctor's appointment or something. And then I got to pay out of that 70 to the doctors. With the HSA, I get $100 and I'm like, no, that's going in the savings account. So then I put all 100 into the savings account. And then when I have to go to the doctor, I pay for it. I'm like, and I'm using this savings, this $100 over here. So I effectively get all of my qualifying medical expenses tax-free.
Correct.
Why hasn't Matt been doing this?
Well, I mean, maybe Matt can't put
Come on, man.
Maybe Matt can't put all $100 in the HSA.
I'm gonna have to cut this. I just feel every day I feel so dumb, Pat. Like this is not helping today. I'm gonna need a cup of coffee and a good cry.
I'm sorry.
It's okay. You know what? Better now than never. Anyway. So maybe I don't have that money, right? Like, okay.
But I think another way to think about it is you make $100, you put 20 in a health savings account, and now you're only taxed on 80. That's the other way to think about it.
Wait.
So you make $100.
Yeah.
20 of it goes into your health savings
Oh,
account.
sure. You're just saying if you don't have all 100 to put away, like if your medical bills total $10,000 annually, you don't have $10,000 perhaps at the time to save, but you could stash away 5,000 or 2,000 or even 1,000.
Yeah.
And then, that helps a little bit.
Right. And let's say you put that money away and you really don't have to have that surgery later this year. Maybe you have to have it in 2 years. Well, that health savings account can be invested and grow over time. Maybe the $5,000 becomes $7,000 by the time you have that surgery. So there's some real benefits there.
Yeah.
And it's not really well known. And now bronze and catastrophic plans are eligible to be linked with that HSA. So it's pretty cool.
Gotcha. My right nostril, I'm like 30% airway. I got a broken nose in jiu-jitsu, and I broken my nose, same nose actually, different time. Had a trampoline gym when I was like 27. It's really, my nose is taking a beating. So I got to save up. For the thing. Cause like this right nostril, it's terrible. Anyway. Okay, great.
HSA is the way to go then.
HSA's good. Here I come, baby.
It's for the win.
Okay, for the win. So catastrophic and bronze, those were the lower plans. Now they're eligible. They didn't used to be eligible, but now they're eligible for that. Great.
There are changes in other years, but I think we've talked about a lot, right? Let's not overwhelm folks. No. These are the things to talk about for 2026.
Okay.
The one thing that was not in the reconciliation bill that's really important for people to understand, it's what's known as enhanced tax credits. So when the Affordable Care Act was passed, Your Health Idaho was created, tax credits had a certain calculation, one of which is if you earn 400% of the federal poverty level or more than that, you get nothing. You're not eligible. So in Idaho, $125,000 earnings for a family of four. If you're $125 and $1, you get zero.
Got it.
For a tax credit. In 2021, the American Rescue Plan Act was passed, and they included enhanced tax credits. So there's no longer that what we call a cliff, meaning there's no income limit to whether you're eligible, but it basically says that no one will pay more than 8.5% of their income for health insurance for the benchmark plan, right? So those enhanced tax credits have made things more affordable. Makes sense, right? They were extended in the Inflation Reduction Act, and the bad news is they expire at the end of 2025.
Wah, wah.
Yeah, that's the music you want to kind of pipe in right now. The other part is Congress doesn't have to do anything to have them expire. They just expire, right? So
that takes an actual act of Congress to get them to not expire.
Correct.
Gotcha.
Yep. So you're wondering, well, this is all, again, this inside baseball stuff, right? So what does it mean to Idahoans? We have 88% of our enrollments are in bronze or silver. Average amount that an individual pays is $75 a month after the tax credit. So if you have a family of four, multiply that by 4, right? Or if you're a single person, you pay $75. That $75 will go to $150 when these tax credits expire. It is essentially increasing their premium double. So we really need to get some traction and hope that Congress extends these in the next few months. And even sooner, if anyone's listening,
if anybody's listening,
like now would be really good before people start shopping and see those higher premiums. So
okay, I'm sorry you're saying okay. So not only is there no 8.5% max on your income threshold, but on top of that, we're increasing the premiums on the average person.
So the tax credits get smaller.
Oh, I see what you're saying. So that's why the 75 average is going to 150.
Correct. Yeah, it has. I wouldn't say it has nothing to do with gross premium, because it does. So the list price, so $500 premium, that's what we call gross premium. You get a tax credit of $400. That means that Matt pays $100.
Right.
Right. The 400's getting smaller. So Matt is writing a check that's more. So just for example, it's still $500. You get a tax credit.
Yeah. I understand the
$300
delta.
and it's double. That's what's happening for effective January 1 of 2026. Because those enhanced tax credits are expiring, we go back to the old rules, and the tax credits get smaller. People write a bigger check for their health insurance. Yeah, that's the wah, wah, wah.
Wah, wah.
Yeah.
Man, that's
really,
a rough one.
Really important for people to understand, right? One, talk to your congressman, let them know what's going on, but also plan for it, right? Budget for it. Know that you may have to pay a little bit more for health insurance next year, and work with an agent or broker, because they can help you maximize that plan that fits you. So let's say you have a particular formulary, maybe you have high blood pressure, right? They can find a plan that helps you be able to afford that and helps you afford the premium.
I didn't think I had high blood pressure, but after this conversation, I'm like, I got a little bit of the hot blood right now.
Or the $600 rebate for your furnace, right? I mean, that could have helped a little bit.
I'm just the HSA thing. I should have. I'm not a very good person. Okay. Like that. And now I'm paying the price, or at least I have been paying the price. Crime, man. I mean, nose for my nose.
I mean, not in an HSA, and I'm a terrible person. That's probably a little bit.
No, that's on par if you know me. Anyway. So without overwhelming people, bottom line is there are some revisions August 25th. Then there are some things that go into effect in January of this coming year. One in particular that we just hit at the end, which is unless there's an action by the U.S. Congress, we will reduce the credits. We're going to make insurances more expensive for people. No more international students, drawn on credits or anything like that. So on and so forth.
And I think if people, have a big change in their income, let's make sure you're updating that with Your Health Idaho.
Make sure you reconcile. Make sure you reconcile.
Yes. File taxes, reconcile. And if you have a new job or you got a raise and you're applying, just have your pay stub ready. Have a W-2, have something that we can then verify that, and you'll be good to go.
Gotcha. Pat, I really appreciate this. I would love to have you back in when we hit the enrollment phase, or when we get really close to it, because again, can you explain something to me just real fast? Sure. Why do we have an enrollment phase like that? Like when I found out that it was like this 2-month window, I'm like, that seems quite like, what if I need health insurance in March? Who cares? Like, and what do the insurance brokers do that are like enrolling people? It's having like a 2-month halibut fishing window where it's like you make all your money in 2 months or something. You're out there on a boat, or I don't know, whatever they do. But the point is, like, why have that window? Why not just like all year round, baby? Here we go.
So when you said, why can't I enroll in March?
Yeah.
Why would you enroll in March and not during open enrollment? Because you needed health insurance, because you had something you had to get taken care of. Maybe you have to have a surgery. Maybe you have a broken arm. Maybe, God forbid, you had cancer, right? If you only have people enrolling when something goes wrong, you don't have a balanced risk pool. So you need people that are regular users of healthcare, right? Wellness visits, all of those things. And when you put all of those different events together, you create what's known as a risk pool. So you want healthy people in there. You want to be able to have a mix of healthy and people that have chronic things, maybe high blood pressure, things like that, or the occasional accident, right? When you put all of those things together, you have a healthy risk pool. If you allow people to enroll whenever they want, you're only going to enroll when something is wrong. Premiums, therefore, would be extremely expensive. Think about car insurance, right? You get in an accident. Hey, wait, I need health insurance. I just rear-ended the guy in front of me. Or car insurance. I just rear-ended the guy, right? Think about how expensive car insurance would be if we only had it when we had an accident.
Yeah. Listen, I am guilty of, I enrolled in like enhanced maternity care or something as like, as my wife and I are very much planners, and like we're having a kid. I'm like, I'm gonna get paternity care. This is gonna be great.
Right.
And then like the second it was over, it's like done.
Yeah.
It turned out to actually not be valuable at all, because the premium upgrade, the additional premium cost was essentially the exact amount I was getting. I was like, well, that doesn't really do anything.
Yeah.
But I felt good about myself.
Well, and that's what matters, right? Feeling good about yourself. Right?
Well, better anyway.
Yeah. Well, we've gone on the full spectrum of Matt Todd feeling good and not so good about himself today.
God bless it, Pat. This is the best. I've never had so much fun talking about health stuff, like health insurance stuff. It's a great time every time you come in.
We try to have a good time, right? Inform people, a few laughs.
Yeah, bronze, catastrophic. Yay, catastrophic.
Yeah, platinum.
Platinum, yeah, it's wild. Bronium.
Yeah.
What was that? You're not going to know the answer to this. There was a South Park episode where Cartman makes a bet that he can get a platinum album, and Stan, his friend, is like, there's no way. And they like bet this huge thing. And Cartman, being the horrible person he is, breaks into the Christian rock music arena. And he's like, look, all you have to take is these songs that these other guys sing. And instead of having like baby and you're my girl and all this stuff, he's like, you just insert Jesus. So he's like, I love you, Jesus. And just like rewrites all these songs. And he goes like astronaut. He's like the superstar. And then he finds out that when he gets to the point where he should get like a platinum album, they give him a baronium album or bronium or whatever it is, because that's how you do it in Christian rock and South Park world. And yeah, man, good times. Yeah. Anyway, Pat, thank you for coming in. Let's do this again and keep kicking some butt.
Really appreciate it, Matt. Thank you.
Thank you.